prospect of an inheritance tax overhaul has led to an outpouring of suggestions from financial experts. Top of the wish list is ditching and revising ex-Chancellor George Osborne's new property rules. You can pass on more than before without a tax penalty, but only if you own your home and give it to direct descendants. Successor Philip Hammond, who has ordered a sweeping review of inheritance tax, is also being warned against any sneaky new ploys to raise revenues from people passing on wealth to loved ones. The Chancellor has asked officials to look at whether inheritance tax causes any distortions to taxpayer decisions and how to simplify the current regime. Inheritance tax was originally designed as a levy on the very wealthy, but soon about 1 in 10 people are forecast to leave estates sufficiently large to qualify, with the property price boom dragging many ordinary families into the net if they live in parts of the country with high house prices. Read more here about how inheritance tax works and Osborne's new property allowance. Ditch Osborne's residence rules and raise threshold to £400k for ALD review should not turn out to be an endeavour to simply raise inheritance tax revenues, which have been steadily rising due to increased property prices and a fixed nil rate band, says Ian Dyall, head of estate planning at financial service firm Tilney. While I welcome the principle of simplifying the inheritance tax regime, I am also cautious about this announcement. Simplification often is anything but, as it inevitably leads to a new tax regime alongside the legacy regime, and often turns out to be a euphemism for revenue generation. Dyall suggests, if the government really wants to simplify the regime, a quick win would be to scrap the residence nil rate band introduced by George Osborne, which is just too complex for people to really get to grips with. Instead, they might apply a higher standard nil rate band of up to £400k per person from April 2020, rather than the £1 million per couple that would be available to some couples from 2020 under the existing rules, provided they don't fall foul of copious qualifying rules. The argument about inheritance tax has been going on almost since the tax was introduced, says Paul Falvey, tax partner at accountancy firm BDO. Part of the complexity arises from a lack of consensus as to whether the tax is legitimate at all. The fourth camp argues that the tax prevents the over-concentration of wealth in a small number of families, which inhibits enterprise. Those against argue that it taxes wealth a second, or even third time. They suggest that, if it were abolished, wealth would cascade down generations and stimulate economic growth. The residence nil rate band, introduced in the Finance Act 2016, is an attempt to take family homes out of inheritance tax, but this has only served to make the system more complex and also limits relief to those who have children. When the government uses the phrase simplification, professional advisors fear the worst, said Wilfred Ferner Miles, partner at law firm Hunter Solicitors. Whilst some have proposed a scrapping of the tax altogether, following countries like Sweden, I cannot see a government looking to bring the national debt under control turning off the inheritance tax cap. Currently worth over £5 billion a year, and rising, this tax burden will increasingly be paid by the inadvertent millionaires who don't realize they have a problem and fail to plan.